Happy Black Friday. Let's see how the shopping season is affecting the market.
Okay, let's talk about the market during this holiday period. So what I'm showing you here, this is our classic. This is the S&P 500, and in red and in purple is the 200-day moving average. This is the chart that we've been looking at pretty much all year. But what you've noticed is I've pulled back and I'm giving you more data in this chart, and that's because we're on new highs watch. Our high for the year came in around the end of August, around that 4,600 on the S&P, 460 on the SPY. And where we are today, we're at 454. So we're about 1% away from new highs for the year. And then more exciting than that, the all-time highs came in somewhere around 4,800 on the S&P 500, 480 on the SPY. And that was at the end of December 2021. So my take of looking at this chart, this is an uptrend. This is what a trend follower would like to invest in. The market looks good. I think we're going to see, new highs for the year and new all-time highs in the fullness of time. You can predict what's going to happen. You can never predict when it's going to happen, but things look good. I wouldn't be surprised if the market has to hit some congestion around 4,600, and if there'll be more congestion at 4,800, some sideways movement, some up and down. But things look really strong. Speaking of looking strong, let's talk about this November. Basically, in roughly the last century, we just had one of the top Novembers that we have ever seen. So the index has gained, the S&P 500 has gained more than 8%, less than 10 times in essentially the last century. So this is a historic November that we're having, and again, it shows you just how strong the market is right now. Speaking of markets, let's look at some other markets here. I'm going to talk about bonds for a second, and I'm talking about long bonds. So this is the 10-year Treasury, and what you notice here is the long bond peaked out somewhere around 5%, and since then it's been trending lower. And in fact, where we are today, we're below 4.5%. I think this is the first inkling of this trend that I think is going to occur next year of rates going lower. We certainly see it at the long end. On the short end, if we look at the two-year peaked out somewhere around 5.5%, and today it's below 5%. This is also something important to pay attention to. I think we're going to see rates lower, short end and long end, as we get into next year, and we're only starting to see the first inklings of that. So it's been a historic November. The market's doing great. We're on all-time high watch. I got nothing but good news for you. I'll see you Wednesday for the news review.